Hello, I'm Kamal Santamaria and welcome to our 2015 preview edition of Counting the Cost. We've moved on from last week where we dissected 2014 and are now being a bit more forward-looking. Because somewhere underneath all the headlines there is an economic recovery underway. We just have to figure out how strong it is and whether the problems of last year, inequality, falling wages, unemployment, will persist or not. Think about the Eurozone, which continues to battle its growth demons. The recovery hasn't really come to Europe, and now there's a decision to make. Does the zone do what Berlin wants it to, i.e. keep cutting deficits and debts, or does the European Central Bank face up to deflation and step in with a full-blown stimulus plan? Meanwhile, what does China do? It's managing its economic slowdown pretty well. There's been no falling off the cliff as such, but property prices are sliding, debt is rising, 7% growth is still great by global standards, but not what we've come to expect from the world's factory. And climate change, this is the story which never goes away. But what we may have in 2015 is something of a zenith. The big climate change conference in Paris at the end of the year. That's what people seem to be building up to. Can we finally get a pact to contain or even cut greenhouse emissions? So let's introduce you to our panel who are going to preview 2015 with us, and they are the same group who picked apart 2014 with us last week. Reintroducing Paul Donovan in London, who is with UBS, their global economist. Also, Rajiv Biswas, Asia Pacific economist with IHS in Singapore, and rounding out the panel once again in London, Martina Larking. She is the head of the Global Agenda Council at the World Economic Forum. Thanks for coming back and talking through 2015, or I guess we're going to play a bit of crystal ball stuff here, aren't we? Looking ahead. I want to start with the Eurozone. This is something we didn't discuss in our look back at 2014, and I feel this is something we really need to address, and I'm going to start with you, Paul. This was described to me almost by actually a chief economist from another bank, from HSBC. He talked about monetary tug of war. You know, you've got Europe, or Berlin, I should say, which wants everyone to keep tightening, stay down the austerity path. And then you've got the rest of the world which wants to start doing a bit more stimulus. Is there a point where the European Central Bank itself will need to step in and go, hey, we actually need to stimulate this economy, we've got to get spending, we've got to get moving?
Well, I mean, the European Central Bank has effectively said that. We had Draghi give the speech basically saying we need more fiscal stimulus. And that, I think, is one of the big problems, because Berlin is furious at this. That the Germans agreed to the negative discount rate. The Germans agreed to expand the ECB's balance sheet. They agreed to an asset-backed securities program on the understanding that Draghi would back the fiscal discipline that the Germans want to see. And so I think actually this has made matters worse, that the ECB, by urging fiscal stimulus, has almost, as it were, put the Germans into a sulk, and they're sitting in their corner and saying, no, we're not going to play anymore. You aren't cooperating, you can't be trusted. And I think that that is actually one of the potentially very damaging political rifts that is emerging within the Eurozone in 2015.
It really isn't it? Martina, can I bring you in here and ask you about this? How do we, when Paul describes that about this, one side sulking in the corner, the other one wants to do this, you've got all these, we talked about this last week, these competing agendas. How can you move forward in the Eurozone when Germany is so strong? It does have strong leadership, but it's not necessarily where everyone wants to go.
Yeah, and we've also more broadly seen a much higher increase in geostrategic competition in many parts of the world. So this really is something that is playing out globally, not just in the Eurozone in Europe, and it's something of big concerns, because obviously for so many of these global challenges that transcend borders, we need cooperation and partnership rather than competition across different nations.
Paul, just a quick final thought on Eurozone before we move on. Deflation. I don't know if you mentioned it in your first answer, but this is real now. This is an absolute real threat there. I mean, how do you see sort of 2015 playing out in that sense in Europe?
Actually, I disagree. Deflation isn't a threat at all in the Eurozone. Negative consumer prices might happen, but that's not deflation. Deflation is a general fall in prices. That's to say goods and services across the board coming down in prices. You get what we call bad deflation, demand deficient deflation, where people are saying, I'm not going to spend money because it's going to be cheaper in the future. We absolutely do not have that in the Eurozone. We are nowhere close to getting that in the Eurozone. What we have got is a belief that oil prices are going to be lower. And because consumers are irrational, they overemphasize oil prices in their perception. So consumers are saying, well, we think the oil price is going to be lower. What consumers most definitely are not doing is saying, we think the oil price is going to be lower, so therefore we think the price of a television or a car is going to be lower. They think the oil price is going to be lower, we've got more money, let's go out and buy a television.
Let's move on to another topic, and this is something Paul raised in the last show, and we want to work with Rajiv actually to talk about this, and this is China. Because Paul was saying that China wasn't such a global influence, or really it's the US that leads us out of these economic crises, etc. But the fact is, China's got slowing growth. We all know this. I think I'm right this time on this one, Paul. China has got slowing growth, and we've got to get used to it. Rajiv, give me your thoughts on this. If China does cut its growth prospects to, around 7%, which is still brilliant, really, by global standards, what's going to happen? What's the knock-on effect going to be from China, Rajiv?
Well, basically, we have seen China in a phase where it is slowing. In the last 30 years, it was growing at an average of about 10% per year. But in the last couple of years, it has been growing at about 7%. And our estimate is that the potential rate for China at the moment until about 2020 is in the order of about 7% per year. But even at 7% growth, that's still pretty spectacular growth for what's now the second biggest economy in the world. And if it can sustain those kind of growth rates till 2020, and then around probably 6% until 2025, it's on track to become the world's biggest economy in terms of actual US dollar terms. So this is a very significant change in the global order, that China's on the threshold of becoming the world's largest economy if it doesn't have some kind of big meltdown anytime soon. And there are risks around China. I mean, growth is moderating, and there's still downside risks, even though growth has slowed. Yeah. There's risk that it could slow further, because there are significant imbalances in the Chinese economy as well, related to shadow banking, the slowdown in residential construction that we're seeing this year, and also, I think, some of the structural problems around local government debt and the
I'm glad you said the D word, debt.
Banks.
This is something I wanted to bring up. China has got rising levels of debt, and is it something that you think the rest of the world should be worried about?
I think since the global financial crisis, we've seen quite an acceleration of credit expansion in China. Immediately after the global financial crisis onset, the Chinese government put in a huge stimulus package, which included a lot of monetary expansion, and the banking system expanded credit by 50%. In 2 years. So that already created fault lines, because a lot of money was lent to local governments and also to the private sector. But on top of that, what we've seen is a further expansion in credit in the last 3 years. And even worse, it's been done by the non-banks, by shadow banks, who didn't have the same kind of risk management. They were not properly regulated to any extent. And that's now created a new set of risks.
Rajiv, quick word on Japan. Martina, I will come back to you in a moment. Do stay there, because you did mention, Rajiv, Japan in our last show. Abenomics, it's back officially, because Shinzo Abe is back officially. Can it work, do you think?
I think what we've seen is the re-election of Abe with a convincing majority for another term means that we're going to see Abenomics continuing. But the real driving force at the moment in Abenomics, which was supposed to have 3 arrows, is really only 1 arrow now, which is monetary stimulus. And the Bank of Japan is pursuing quantitative easing policies and looks set to do so for the foreseeable future. That's helped to drive the yen substantially down and has increased the competitiveness of Japanese exports, and corporate profitability has improved as well. But this is not really any kind of solution in the long term for Japan, with its very high levels of government debt, which need to be stabilized and gradually brought down, and that's not happening right now.
But just
and
hang on,
also
Rajiv, hang on a second
declining population. So
sorry to interrupt you. We've got a bit of a delay to you in Singapore. Paul, you were shaking your head there. What's your beef?
Well, I disagree. Japan's exports have not become more competitive. Japanese export prices have not fallen. We have had 4 years of dramatic yen weakness. Japanese exporters are not cutting their prices in foreign currency terms. What they're doing is they're raising their prices in yen terms. Japanese exporters are losing export market share today. The Koreans keep complaining bitterly about this competitive advantage. It's all a myth. Japanese auto exports, for example, are rising in price in dollars, in euros, in any currency. You're actually seeing rising prices coming through. Japanese companies have chosen to take increased profit, not increase market share, not increase competitiveness. And that, I think, is Abe's real problem. He's got companies that are more profitable, but they're not making any more stuff, so they're not employing any more people in Japan. If Abe is going to salvage something from the wreckage of Abenomics, the only way he can do that is to get Japanese companies to take their increased profits and either invest in Japan or pay higher wages in Japan. The problem is, so far, Japanese companies have been tending to take their higher profits and do nothing with them, or take their higher profits and invest them, but invest them outside of Japan. So I think we've got to follow the money. It's not about competitiveness. Japan has become no more competitive with the weaker yen. They've become more profitable, but that means we've got to see where the profits end up.
Right, complete change of topic now. Martina, I'm coming to you. Thank you for waiting over there. And this is something you've mentioned already in this show and I think in our last show this week, and that is climate change. It's been a big feature in the sort of the back end of 2014 because we had the Lima conference, the UN climate change conference, and we had that big deal between the United States and China as well, which everyone thought, oh, this is a good sign. This is a good sign that things are actually moving. Do you believe there's enough momentum now to actually build something for Paris, it will be in 2015?
Yeah, I think we've seen a very good progress, and Lima really broke through a firewall, and I think a lot is achievable in Paris, and we've seen a lot of progress being made also by the business community who's willing to step up and mobilize in a concerted effort. There's technology costs that are falling on some of the new developments and technological innovations related to climate. But most importantly, I think we need to start galvanize around closing that funding gap between the commitments that were made and the targets that were set. And here we're making a major effort to work with some of the non-state actors to really mobilize the funding and closing that gap that is real and exists. And if we don't bridge that, then we'll have a problem in Paris next year.
What's more important though, political will, or as you described, there's moves by businesses, which is great, but in the end, isn't it political will that will actually get it over the line? And that's when we come into these problems every time about who should be actually paying for the cost of carbon emissions.
Yeah, I think we need to move beyond the debate of who should be paying and how much each one should be paying, and really look at how can each nation and country, but also each stakeholder group contribute to this major problem, which now affects every nation, every stakeholder in the world. And it's really about how can we make progress rather than look back and blame the developing nations for some of the things that they've done, or look at whether the developing nations should pay less than the developed nations. And it's really about looking forward and making progress on what can be achieved and what should be achieved, both from the political side as well as from the business side. And society has a role to play as well.
Rajiv, who's going to pay in Asia? Give me the Asia perspective, which you can, especially when you've got nations like China, which is so central to this whole. And as I said, that deal between the US and China was so central to everyone moving forward.
Yeah, well, I think obviously we've seen a political shift in the perspective of China, in that they're now recognizing, partly at the high level, but partly also because of grassroots protests, really, about the costs of pollution and environmental damage, that they have to shift their balance away from purely going for high growth towards a better balance in terms of their trade-off between growth and the environment. And you're seeing that probably showing up very clearly in their energy policy, where although coal's still the cheapest form of fuel, that they're switching towards more gas in their mix, particularly because they need to reduce pollution in the big coastal cities like Beijing and Shanghai, where it's really a very big problem. And even Hong Kong's affected by the noxious fumes that come over from the mainland, even though they themselves are not generating that. So I think the popular protests are quite important. You've had some very big scandals over food poisoning where people have died, and that's created a huge backlash as well. So I think partly it's because the leadership recognized you need a better balance on climate change. There's obviously external pressure, but on the other hand, I think the grassroots pressure is also playing a role, even though it's not a democracy.
Paul, I don't know how much environment and climate change is part of your brief there at UBS, but tell me your thoughts on this sort of thing. Again, what we've seen towards the back end of 2014, what it could actually mean for a change in economic thinking about how we pay for all of this.
It was quite a big part of our thinking at UBS. Indeed, I've written 2 books on the subject, both available from all good booksellers.
I don't know you very well, do I, Paul?
If we look at what's going on in the world, I think that the interesting thing in this crisis is that, unlike previous recessions, we didn't see a significant abatement of climate change policy. If you go back to the 2001 recession, certainly to the 1991 recession, what we saw during those periods of economic downturn is that growth overwhelms the desire for environmental sustainability. And we haven't had that, at least not to the same degree, in the global financial crisis, which is, in one sense, somewhat surprising given how severe the financial credit crunch was. And I think that's because there's a recognition that it's not just a financial credit crunch, it's also an environmental credit crunch. We're living on borrowed time in terms of environmental resources, and we can't carry on with that. We've got to start to tackle the environmental credit crunch. So that, I think, is the good news. That's the good momentum. It shows that there is an understanding that there is an economic cost, a very significant economic cost, as we've just been hearing on China, potentially quite severe economic cost over the medium term. However, I think the financial credit crunch has led to a change in consumer behaviour, and one of the concerns, I think, is that environmental policy is somewhat driving by looking in the rearview mirror. Everyone's looking at the past and saying, well, that's how things have developed in the past, we've got to tackle this problem because that's what happened in the past, not recognising necessarily that consumer patterns have changed very rapidly over the last few years, and in fact there may be somewhat different environmental problems. A lot of environmental policy is a game of sort of whack-a-mole. You hit one problem here and another problem pops up somewhere else. And that's been one of the recurring features of the last few years. So I think that the challenge is not necessarily to talk about payment or who's to blame. It's making sure that the environmental policies of the future match with consumer and economic behaviour in the future.
Right. The next thing I want to address with all three of you is, I mean, we've talked about Europe already, we've talked plenty about the United States and China. It is the more emerging nations, the BRICS, if you want to call them that, the Brazils, Russias, India, China, etc. The places which have been the growth engines for some time, but have seen a slowdown as well and have seen a change in the way the money is moving around. Martina, I'll start with you. What do you think about these, say some of the Latin American nations, these emerging nations, the importance they will play in moving us forward in 2015?
Well, I think what we've seen concerning the emerging nations is linking back to some of the geopolitical issues is much more geostrategic competition, but also a new development around regional arrangements. So rather than global governance arrangements to solve some of the problems we discussed, is we're seeing increasing regional arrangements, whether this is the BRICS Development Bank, the Asia Infrastructure Investment Bank. All of these efforts are really interesting developments to look at how these emerging nations are actually collaborating together and arranging themselves in absence of a real sound global governance system that can address some of the issues that need to be tackled.
But is that possibly, Martina, not just another form of fragmentation? If you've got fragmentation between countries and then some countries in some areas band together and they just create another team, I guess, playing against everyone else, just a different kind of fragmentation.
I mean, they obviously need to be aligned with some of the larger global governance structures and efforts. So if they're aligned with that and if they're advancing in that way, then it's a positive development. If they're not, obviously you see much more fragmentation and disorganization. But on the economic front, I think we've seen a better integration, whereas on the political front, probably we've seen a much larger fragmentation going forward in the world more generally.
Rajiv Biswas, who needs to lead in Asia out of those emerging nations? And, let's get past some of the Indias and the Chinas, which we always talk about. But, we mentioned Indonesia before as well. That's a big growing economy. Asia's where there should be a lot of growth.
I think when we look at 2015, our expectation is that overall the Asia-Pacific region will still perform relatively well. On the margin, China might be slightly softer. but I think we're seeing a pickup in India. And we mustn't forget Southeast Asia, as you rightly say. Indonesia is also a very important country that I think should be included in the BRICS. You know, it has a very large population, it's been growing relatively rapidly, and it's got quite a rapidly growing consumer middle class. So on those grounds, just as South Africa, it ought to be one of the BRICS. But then when you look at the other members of the ASEAN grouping of countries, there's also some pretty growth stories going on elsewhere. Malaysia has been quite steadily performing at 5% per year. The oil price shock might hurt them a little bit, but they're quite a diversified economy. And then Philippines has really come from nowhere, I would say, in the last 3 or 4 years under President Aquino to become quite a fast-growing economy and looks set to continue, at least during his remaining term of office, to be growing at around about 6% per year. And then you have the frontier economies in ASEAN. You've got Vietnam, which is also having an economic comeback. It's becoming a cluster for the electronics industry. We've seen in the last 4 years a big surge in electronics exports, and that's very much helping their economy. They're establishing a chemicals industry. So a lot of new green shoots in their manufacturing sector, which will serve them well in the long term. And then, of course, Myanmar has been quite a dynamic story as well, with their opening up to the world and a lot of new investment coming into Myanmar and a lot of infrastructure development as well. So they look set to be growing at 7% or more for a long period of time. So there is a lot of exciting stories in Southeast Asia right now. So it's not all gloom and doom in emerging markets.
Paul, can you add in some African countries for us as well? We've sort of neglected that a little bit. And I mean, I think some of them, particularly say Nigeria, will be affected by the oil price. But what sort of growth will we see coming out of there, do you think?
Well, I mean, the problem for Africa, of course, is that for at least sub-Saharan Africa, integration into the global economy is primarily coming through raw materials, and global commodity prices remain relatively weak. Otherwise, it is development agendas and it is relatively low levels of economic standard of living as a starting point. So the growth levels here are going to depend on local circumstances, not on global circumstances, and obviously those will vary quite considerably from country to country. In terms of the medium-term development agenda, the important issues are, as they've always been, better skills levels, better education, rule of law, freedom of speech, and freedom from prejudice. Because that allows you to maximize your human capital, if one can put it in rather blunt economic terms, and that is sub-Saharan Africa's great competitive advantage. I would add, I think, at a general level in emerging markets, there are two challenges, uncertainties over the next year or two, which we need to think about. The first of these is the collapse of globalization. Globalization has completely collapsed. Not in terms of trade, trade's fine, trade's in fact growing quite nicely, but in terms of capital. Global capital flows prior to the crisis were running at over 20% of global GDP, now they're running at about 5%. If you're an emerging market, by definition, you're short of capital. You need to attract capital in to boost yourselves up, to build your infrastructure. It's something we were discussing last week and again today. And that's going to be more difficult in the future with curtailed global capital flows. The other thing I think that is important is trade, global trade. However, the transatlantic trade and investment partnership that is being negotiated between the US and EU would impose US and EU standards on global trade. Basically, global trade would then be run by Washington and Brussels. That's not necessarily a bad thing overall, but it could present challenges to a number of emerging markets that do not have the same standards, environmental standards, labour standards, that the US and EU are insisting upon. And that could be a challenge if we see TTIP coming through in the next couple of years.
Folks, we're going to leave it there. Thank you so much for your time. Paul Donovan in London, Rajiv Biswas in Singapore, and Martina Larking in London as well. Thank you all so much for your time. And we will no doubt see them back during the course of the year as we try to figure out just what this thing called the global economy is really doing. Thanks for joining us for this edition of Counting the Cost. I'm Kamal Santamaria, back next week with our first full news show for 2015. We look forward to seeing you then.